Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on Zevotek Incorporated, stock symbol ZVTK. This is the weekly chart, which means every bar and or candle represents one session worth of price action. Due to popular demand and request among members at TimelessWealth.net, I've decided to publish yet another update to the chart on Zevotek Incorporated following numerous additions that came out last week. If you remember, I talked about a key resisting level at the 1 penny mark, and I mentioned that it was key for two reasons. One, the fact that it dates back to being resistance in earlier areas right here, as well as the fact that it poses psychological resistance. That is, when a stock goes from sub penny to penny, there is always resistance at the 1 penny mark involved. And on Monday's trading session, the price gapped up above this resisting level and closed above it, showing strength on above average volume. You can see that this is the volume that came in on Monday's trading session, and you can compare that to this bar right here, which would represent the volume accumulated throughout the entire week just before the Christmas break. And as you can see, this horizontal line in green represents support now that this resistance level has been broken. Going forward, in the event that the market does continue to appreciate, we're looking at resistance at the 1 4/10 of a cent mark, which would be the close on Monday's trading session. The price did not close above this mark, so it remains resistance. And we will indicate that with a dashed line just to represent slight resistance, as well as the high on the trading session, which was 106.3, and we will indicate that this as a key resisting level. And we'll even circle this so that you remember this is a key mark to watch for. Remember that round marks such as the 1 penny mark, the 1.5 penny mark, always pose intraday resistance, just because a lot of traders like to buy at even marks and then sell at even marks, so it's easier to calculate whatever transactions they're occurring. And the key resisting level, as per this chart, which again is the weekly chart, so we're looking at resistance dating back to early 09, late 08, would be this 2 cent mark. I believe that's right, this is the 2 cent mark. So the 2 cent mark would be the key one going forward. Remember that last week I talked about the 1 cent mark being key. So you can see we've made quite a bit of progress, and now we're approaching the 2 cent mark, which will be the key break to watch for. And the second thing that you should watch for is the volume that comes in. Hopefully the market stays liquid. In the event that it does, indicators such as the RSI, full stochastics money flow index, will continue pointing up and show that the market is indeed in a state of momentum. Look at the tricks coming off. The Chaikin money flow just going positive now. Money flow index, full stochastics, and relative strength index. Now let's quickly flip over to a daily chart and take a look at what happened on Monday's trading session. Here we are with the daily chart. As you can see, I've added the same annotations I had on the weekly chart to the daily chart. The difference between the two is that every bar and or candle on this chart represents one session worth of price action. Likewise, this bar right here would represent Monday's trading session. The key points again that I talked about were the 1 cent mark representing key support, because this was a key breakout. I talked about slight resistance at the close, which is 1 4/10 of a cent, and resistance at the high on the session, which is 1 63/100 of a cent. So we'll indicate that in red and keep those key points in mind. We also talked about key resistance now going forward in the event that the market continues appreciating in price, of course. That would be the 2 cent mark. But let's talk about support now. We're looking at support at 1 cent mark, as I've mentioned 3 times now, as well as the open on Monday's trading session, which would represent slight support, just as the 1 4/10 of a cent mark represents slight resistance. Looking at some of the technical indicators here, you can see that we are in an overbought condition, and some indicators are signaling potential reversal or retracement in price, such as the full stochastic, which now shows a bearish crossover. However, in the event that Tuesday's trading session and perhaps Wednesday's trading session continues appreciating in price, that is, you'll see this full stochastics begin to curl back up. What we'd be looking for here is a bounce off this 80 mark. You can remember in the event again that you watched my prior videos that I talked about full stochastics needing to break above this 80 mark to show some momentum coming into the stock. It had, and you can see the volume that came as a result. So what I'd like to see here is a bounce off the 80 mark. Money flow index is strong. You can see Chaikin money flow is very strong. Good accumulation taking place. Tricks now showing an uptrend has occurred, as well as the MACD, which shows no sign of reversal, in fact growing on quite a steep angle. And now back to the chart, of course, with our key supporting levels at 1 cent and 1 and 1500ths of a cent, which would be the open of Monday's trading session. Resistance at 1 and 4/10ths of a cent and 1 and 6300ths of a cent, as well as the 2 cent mark. What I'd look for is something along these lines, which is volume. As I've mentioned, look for liquid markets. If the market is liquid, day traders will hop in and the volume will increase substantially. This is what you'd like to see for continued price action and a liquid market. Once again, this was Edward Stevenson, TimelessWealth.net. I would encourage you to visit my site, tune into some of the materials I've recently added, look through some of my prior videos on ZVTK, that's Zevotek Incorporated, and of course subscribe to my free newsletter for overlooked trading and undervalued investment ideas. Thank you for listening.